I am Anandi from Sri Ram Nalamani Yadava College of Arts and Science. Today we discuss about the GST, Goods and Service Tax Introduction. The introduction of Goods and Service Tax would be a significant step in the field of indirect tax reforms in India. Goods and Service Tax is an indirect tax which has been implemented in India from July 1st, 2017. It is a consumption based tax levied on sale, manufacture, and consumption of goods and services at a national level. GST is a value added tax levied on manufacturer, sale, and consumption of goods and services. GST will be taxed and the burden of the tax is to be borne by the financial consumer. The introduction of the GST has replaced the following taxes which was levied earlier. First one, central excise duty, central sales tax, service tax, additional duties of customs, additional duties of excise duty levied under textile and textile products. Definition of GST. The definition of GST is a tax on goods and service with value addition at each stage, having comprehensive and continuous chain of set of benefits from the producers or service providers point up to the retailer's level where only the financial consumer should bear the tax. The definition provided by Megotra and Agarwal. Applicability of GST. The Union government presented the Central Goods and Service Tax Bill 2017 in Lok Sabha on 27 March 2017 and the same was passed by Lok Sabha on 29 March 2017. The Raj Sabha passed the bill on April 6, 2017 and it was assented by the President on April 13, 2017. GST is an indirect tax which was implemented in India from July 1st, 2017. Next, important terms in goods. The meaning of goods. As per section 252 of the CGST Act 2017, goods means every kinds of movable property other than money and securities, but includes actionable claim, growing crops, grass, and things attached to or forming part of the land which are agreed to be served before supplier or under a contract of supply. The term goods does not include securities and money. The goods does not include securities and money. Other movable goods are included in the goods. Then we discuss about the services in GST. Services means anything other than goods, money and securities, but include the activities relating to the use of money or its conversion by cash or by any kind other mode. from one form, currency or denomination, to another form, currency or denomination for which a separate consideration is charged. Next, features of GST. GST is a consumption based tax system that is imposed on the supply of goods and services with the country. It aims to simplify the tax structure, reduce tax evasion, and promote a more transparent and efficient tax collection process. The following are the features of GST: unified tax system, destination based principle, multi stage taxation, input tax credit, dual GST, threshold exemption, threshold exemption, interstate supply, online compliances, tax slab, GST on imports, service taxation, exports are zero rated, self assessment, one nation, one tax, free flow of credit, anti profiteering class. The future of GST is unified tax system. GST integrates various taxes into a single tax regime, eliminating the complexities of dealing with multiple taxes at different levels. Next point, destination based principles. GST is based on the principles of destination based consumption taxation as against the principles of origin based taxation. GST is collected in the state where the final consumptions of goods or services occurs. This ensures that revenue generated from the tax goes to the consuming state rather than the producing state. Multi-stage taxation. GST is applied at each stage of the supply chain, from raw material to the final consumer, with each stage providing input tax credit for taxes paid at the previous stage. Input tax credit. Input tax credit to be broad based by making it available in respect of taxes paid on any supply of goods or services are both used or intended to be used in the course or furtherance of business. The fifth point is dual GST. GST is a dual GST with center and the state simultaneously living in on a common base. The GST levied by the central shall be central GST CGST, and the GST levied by the state shall be state SGST. Union territories without legislature levy union territory GST. It means UTGST. Threshold exemptions. Small business with turnover below a certain threshold are exempt from GST to reduce the burden on small scale enterprises. Taxpayers with an annual turnover of rupees 40 lakhs, rupees 20 lakhs for special category states would be exempt from GST. 7 point interstate supply. An integrated GST. It means IGST would be levied on interstate supply of goods or services. This GST will be collected by the center. The eighth one is online compliance. GST compliance involves filing returns and maintaining records of online platforms, increasing transparency and reducing paperwork. Ninth one is tax slab. GST implemented with multiple tax rates for different categories of goods and services. Common tax rate include a standard rate, a lower rate for essential goods, and a higher rate for luxury item. 10th one. GST on imports. Under GST laws, exports are not taxable as the place of consumption is not in India. Import of goods would be treated as interstate supplies and should be subject to IGST in addition to the applicable custom duties. Import of services would be treated as interstate supplies and would be treated to IGST. 11th point. Service taxation. GST also applies to service, making the tax system more comprehensive. 12th point. Exports are zero rated. GST is not levied on exports by making them zero rated taxable. 13th point. Self-assessment. A registered person has to pay on the basis of self-assessment. Business are required to self-assess their tax liability, file periodic returns, and make payment online. The system aims to increase transparency and minimize direct interaction with tax authorities. 14th point. One nation, one tax. GST is levied on supply of goods and services across India. It is a single tax on the supply of goods and services from the point of production to the point of sale to final consumer. Uniform tax is levied for the same commodity transacted across the states. 15th one. Free flow of credit. In GST regime, there is free flow of credit when there is interstate supply. The final and the last features of GST is anti-profiteering clause. Anti-profiteering clause has been provided in order to ensure that business pass on the benefits of reduced tax incidence on goods and services to the consumers. Thank you.